Alright, let's get things started, guys. Welcome to the Thursday live stream for the week of April 1st through 5th. Welcome back, guys. So, excuse me, my voice. So let's get started right away. Today we've had a pretty earth-shattering day is what I would say, because we have officially broken the upside trend that we've had and held since October's lows to the downside. And we've got our first quote-unquote correction. One day doesn't make the trend, but if you guys take a look at the S&P futures or even NASDAQ futures that I've brought up for you guys here, things don't look too good. And the reason why, first, is that number one, we have broken and closed below the daily 10 and the daily 21. The daily 10 is my red line, the daily 21 is my light blue line. And the same goes for NASDAQ, right? So this is pretty, it's again, not good. However, for SPY here, there's a lot more room to move to the downside compared to NASDAQ. And this is the comparison that I wanted to show you guys, because NASDAQ futures has actually arrived at its daily 50 SMA. And so tomorrow, what I'm going to be expecting is somewhat of a small bounce, maybe even a small gap up. And we can possibly see a little bit of that upward move, that kind of a weak bounce up higher with low volume on NASDAQ first. So the leaders will try to bounce first, and then the S&P 500 will follow suit. Now, of course, I'm not saying that we're going to be seeing a complete return back to the upside, because again, we've been following the underlying indications. Now, what were the underlying indications? Well, first of all, let's go over them one by one. Right, so we've been seeing energy, first of all, energy and overall just commodities continuously rising since February. Right, this started to occur back in February, and we noticed this. Right, we noticed that commodities are starting to consolidate and start to move up higher. And I specifically called out OXY and XOM, right? OXY, ticker symbols OXY and XOM back in February. And so far, we've been seeing that huge run up in energy names. And, just overall commodities just continue to rake higher and higher. And to me, this seems a little bit, conflicting for the overall market uptrend. And so, it was kind of concerning to me that basically the market wasn't paying attention to it. The fact that we're seeing inflation numbers slightly going hotter, with February and January's reports slightly hotter than usual. And on top of that, we're seeing energy prices moving up higher, right? The overall energy sector being very, very bullish. And so, that's the reason why I also called out the very, very good, swing trade on VLO. Our VLO hit new all-time highs today yet again, after being called out all the way back in the first week of March, right? So it loads right here. We had a nice entry point at 144, and today it's sitting at 180.61 at close. Now, overall, energy and commodities have been, again, a rager, and it's going to be a concern for inflation, and the market is not going to like that. Right? You guys have to understand that energy is a volatile sector to be looking at, and it's definitely going to affect inflationary I guess predictions in the near-term future, right? Expectations is the better word there. So, this rise in energy and commodities, I would say it's a bit inflated now. I'm pretty sure we should be getting a nice pullback in the meantime. But this entire run-up so far in the overall energy sector is now going to be priced in by the market. And how is it going to be priced in by the market? By moving down, right? By moving down. So that's one thing that we talked about all the way back in February. And the other one that we were looking at was, the bond yield, right? TNX. So this is the very popular ticker to look at. This is the 10-year yield. And My God, my Wi-Fi is very slow today. You know, back in February, the mid-February, we got a very big jump, right? And we continue to stay at these new highs, right, relative to around here, right? So this was pretty concerning. And then so far, well, right after February, we got a nice little drop. However, instead of retesting the lows that we created here, we continue to make higher lows. And so I kept my eye on this because it's a little bit concerning when you're starting to see bond yields slowly rising with higher highs like we saw here and higher lows like we saw here and over here. And that prompted me to go, hey, we can combine this with the other underlying indications that the market is probably going to pull back very soon, right? However, I kept on telling you guys to make sure you guys follow the trend. Right, we need to be able to keep this in the back of your head. I even said this on Tuesday's live stream. Right, I even gave you guys a cautionary warning that you know, the reasons why we need to be keeping these underlying indications in the back of our head is that when the market decides to switch and reverse to the downside, we can quickly switch our mindset as well, right? So, you know, again, tops take a lot of time to form, and so far it's been about 2 months worth of development of this underlying indications that were telling us that we should be seeing a market top very, very soon. And so, you know, bond yields surging to the upside was definitely something to not be to not take lightly, basically. And today we actually had a little bit of a pretty interesting action here on the 10-year yield, because we've had several Fed speakers today, and tomorrow we're going to get some Fed speakers tomorrow as well. They're a bit hawkish, right? I believe one of them even said that they might not even have any rate cuts for 2024, which is crazy since Jerome Powell himself said that we should be getting at least 3 rate cuts this year. So I think the bond yields are kind of reacting to that. That's why they're moving down today. But I wouldn't be surprised if bond yields start to move back up tomorrow as more Fed speakers and potentially more Fed speakers become more hawkish, right? Due to the fact that they can't ignore the surge in commodities. Again, we've talked about this in February. Right, I gave out so many good plays, right? Specifically OXY, XOM, and VLO. Right, I even mentioned PBF for my members as well. So, you know, again, these Fed members are going to be concerned about the surge in energy prices. You guys should be feeling as well, like I do, especially with that premium price. Woo! All right, it's almost $5 again. So, you know, here in California for the premium gas, but you know, it is what it is. But at the very least, I can prepare myself by following crude oil trends, right? I guess that's a little positive of knowing how the markets move and what to look for, right? So, you know, bond yields was definitely something to be watching out for. And the next one, or the next underlying indication was that, well, obviously if bond yields are going up higher, then bond prices will be moving down. And that's exactly what has been occurring. So unfortunately, I got kicked out of my bond position. Unfortunately, back around here when we started to really just come right back down to this 92 support level, and again, we broke below it briefly, but now we're below all my major SMAs. I mean, I don't think I have much of a lot of things to say there. I think. I mean, that's essentially what's occurring here is a downtrend, right? And we've officially made lower lows at this break of 92 on TLT. This is the 20+ year Treasury bond ETF, and even on IEI, right? This is the 3 to 7 year Treasury bond ETF, and if it's gonna load, you know, it's below most of my major SMAs for IEI as well. So, you know, both of them have broken below briefly their respective daily support levels. For IEI, it's 115, but today I was able to reclaim it. However, like I said with TNX, right, I wouldn't be surprised if bond yields decide to come back up tomorrow as well, especially on the backdrop of the non-farm payroll and unemployment rate data. So that's what we're getting tomorrow. And it's all going to depend on how the market reacts to that information. I also wouldn't be surprised if you get a slight jump up higher based on that data, or based on how VIX has been acting on, well, today early morning and yesterday and the day before that. We actually might not react too much to the non-farm payrolls and the unemployment rate, the UR data for the month of March, because again, VIX started to kind of basically it was beginning to tighten up again, right? It was starting to tighten up, and it started to move lower. All right, so instead of seeing that vol expansion as I wanted to see, we started to move back down. And today, early morning, was the same theme, right? We're starting to see that contraction of volatility until obviously we saw that huge burst in selling volume in the overall markets, and VIX just absolutely popped off and officially closed over 16 today, right? 16.34 is the value that we have for the VIX. So this, again, is not good, right? We've been making these nice little pops, and I've been telling you guys back in February as well. Again, everything points back to February, that these pops are something to look out for, and we shouldn't be ignoring them. And as long as we keep them in the back of our head, we can be quick to switch our thinking and our sentiment on the overall markets. And so now the fact that we've seen all these underlying indications officially giving us the sell signal from the markets, we know exactly what to expect for the next couple of weeks and for the next couple of months, and potentially for quarter two as well. Does that make sense, guys? Okay, so hey, 6 likes. Thank you guys. That's what's up. Thank you guys, thank you. So hopefully you guys are still awake. I know I'm talking a lot about the stuff that I talked about back in February, but I have to repeat it because it really tells you guys and opens your own eyes. Right? It really opens your own eyes as to what I was seeing, right? And it really helps you understand why I was saying all of those things back in February as well. And I wasn't just relying on seasonality trends, even though that was a major previous data to be relying on based on the fact that we've always had that window of weakness in February or middle of quarter one. So when we didn't get that, I knew that somewhere around quarter two, we should be getting some sort of a pullback. And today, we got the official sell signals throughout the entirety of the markets, right? So, with bond prices, with the VIX surging, bond prices moving down, bond yield surging, commodities just raging to the upside. And also, you guys can't forget about this, okay? Small caps, right? Small caps and mid caps. These are our market caps that really help out with the market breadth. And today, it really provided a good idea as to the reasons why IWM and MDY or mid caps are considered laggards, right? Because these, IWM, small caps and mid caps have been struggling, right? They haven't been able to see a very good solid breakout and sustain that breakout. And that's the reasons why I was like, I told my members a couple of weeks ago that this 209 to 210 area is a huge area of supply, and we continued to reject off of that. I mean, we saw that back in last week, right? Last Thursday, and also on Monday of this week, as we continue to reject lower and close below this 209 lower range of that 209 to 210 supply area. And so, IWM should continue to move down, especially with the fact that the Federal Reserve members all being very hawkish today. And I would imagine that some Federal Reserve members are also going to be hawkish tomorrow based on the non-farm payrolls and unemployment rate data. Okay. So, it's overall, I think we did a pretty good job of being able to identify these underlying indications that the markets were telling us that we're about to see a pullback. I mean, if I just go back to SPY alone, right, XPY. Okay, I've also mentioned this a couple of months ago as well, back in February. Again, everything leads back to February. early to mid-February. All right. So I've been constantly telling you guys this. If you guys watch my previous then private but now public technical analysis videos for the CFO Stream and Watch newsletter. Again, if you guys want to join the newsletter and if you guys want to get access to the newsletter and the technical analysis videos a day sooner, text me, DM me on Instagram at chartsfocus1. You guys will have a nice surprise waiting for you. So, again, with these signs here on SPY in itself, just on the markets alone, right? Just the overall market on the S&P 500, we have been seeing huge jumps in red selling volume, and we've seen an increase in frequency since February, right? And especially after March's OPEX, I believe that was March 15th, okay? We've been seeing a lot of just absolutely an influx, basically, of selling volume. I mean, if you just count how many red selling volume days that we've had since the beginning of March, right? Since the beginning of March. How about that, right? It completely tells you that, hey, we need to start offloading, right? This is starting to become a risk-off environment. And I've also mentioned this when I talked about the volume bars, the increasing frequency of these selling red volume bars. And I said this back in February as well, right? Yes, there were less selling volume bars, but we were seeing bigger pops in selling volume bars like we saw here, right? Over here, and also back here, which is back in January 31st, but you guys know what I'm saying, right? So, but in hindsight now, it just seems so obvious, right? With such a big pop in red volume, now we're seeing a bunch of red selling volume, including today. And again, it's literally telling us that, hey, we need to start unloading, right? This is a risk-off environment. If you want to short, go ahead and short. But if you want to stay long, you need to start offloading on some positions, right? Because having cash on hand is going to be very, very useful when the market bottoms out. And I'm not going to tell you guys when I think the market will bottom out just yet. My members know that. They've been knowing that for quite some time now, but I'll make sure you guys remember as well. If you guys are watching this, any of my private members. But the overall markets, it should continue to move lower in the first month and a half. That's a little hint there for a month and a half of quarter two. And it will definitely take some time to bottom out. There's another hint there before we see another rise up higher and we continue the uptrend and obviously end up with another higher high and new all-time high for this fiscal year. So, with the overall markets just giving us that official selling signal, and we're seeing this momentum shift now and a total sentiment shift as well today. I wouldn't be surprised if we see a nice green open tomorrow on the backdrop of the NFP and UR data, and also seeing the day go from green to red. All right, so I wouldn't be surprised if we, for example, retested 517 tomorrow or around 518, or simply again just 517. Because why? Because that's also where my daily 21 SMA closed at today. So if you guys take a look at the top left here, this light blue number, it coincides with my light blue 21-day moving average here. It closed at 516.95. So again, I wouldn't be surprised if we see a retest for a nice small bounce. This could be a nice time for the FOMO buyers to try their last stand to defend this uptrend. But based on everything that I've talked about so far in this live stream and also in the past live stream since February and all the past videos that I told you guys to watch, it seems like the shift is going towards the bears, right? The momentum, the sentiment, everything, right? Everything is shifting towards the group of bears for the short sellers. And again, we saw that today with this very, very bearish engulfing candlestick. And guess what? I also mentioned the past couple of days, and including about 2 weeks ago as well, that this 524 all-time high level will most likely become a resistance level. And guess what? We did that today with a nice triple top as we retested this 524 resistance level again. So obviously we didn't exactly hit it, but we got into at least the close vicinity of 524 with the current high of today at 523.87. So, you know, it's everything is aligning up, right? Everything is aligning up. There's a lot of good alignment that I'm seeing so far across the markets, and we're really starting to see that momentum and sentiment shift towards the bears. So I would definitely watch out for any type of longs that you guys are planning out. I do have current positions that are long, but for the long-term run. So that's something that I can't hold on because I do have the cash on hand to be able to, you know, deal with that type of risk that I'm putting on for such long positions to hold into a potential market correction. And so one last thing about the markets here is that if I retrace from today's high, right, roughly around today's high, okay, and I go all the way down to my 477.50 floor here, and again, I've talked about this level multiple times in previous live streams, previous videos that you guys can watch on my channel for the past couple of months. So if you guys go all the way back to February, okay, I've talked about this level, right? So this 477.50 level is a textbook level. And why do I say that? Well, as I repeatedly said and stated, this is a potential for the markets to move down to, because again, a textbook percentage range for a textbook pullback sits around 5 to 10%. And if I go from the current all-time highs, like I did right now, I'm showing you guys, all the way down to 477.50. So to 524, okay, or just today's high of today, 523.87, all the way back down to around roughly 477.50, we're still sitting at negative 8.83%, or around 9%. So again, I do not have to raise my floor of 477.50. I also mentioned that last month, that if I do have to raise my floor for a potential prediction where the market could pivot from a textbook pullback, then I will. But I've been telling you guys that even if we didn't make a new all-time high, I still shouldn't be having to move my floor yet until we start surpassing that negative 10% maximum range of a textbook pullback percentage range, right? So, you know, again, I have yet to raise my floor. There really isn't any reason to raise my floor yet. Again, just like, well, I just showed you guys. I just gave you guys a very, very good visual of what I'm looking at and what I'm thinking about. So hopefully that kind of clicks in your head, guys, quickly, because again, we need to be prepared for this very quick momentum and sentiment shift that the markets received today. So, hey, what's up, Joel? I'm doing very, very good. All right, and wow, there's a lot of people in here tonight. Seems like that grace period is what's needed. A lot of people like it when I give kind of a 10 to 15 minutes grace period before I actually begin at our usual time at 8 p.m. or 11 p.m. depending on what time zone you guys are in. So very good to see. Very, very good to see. So, you know, overall, I think tomorrow there will be a very slim chance for the buyers to really defend the uptrend here. Well, it's, to me, the uptrend has failed now because we have closed officially below my daily 10 and daily 21 SMAs. And I've been warning you guys about this as well, just based on my SMAs too. So a lot, basically, again, let me just give you guys a whole summary. Basically, I've been giving you guys these underlying indications since February, right? Hopefully I've been drilling it inside you guys' heads to really remember and put it in the back of your heads, because when we have days like this, you guys can very quickly switch your overall bias and sentiment, whatever it is, right? Whatever, you know, this is, it would have been the same if I was talking about a current downtrend and I told you guys to get ready for a potential reversal to the upside because I saw such underlying signs and indications. But in our current case, this is for a potential reversal to the downside. And so hopefully you guys were able to continuously listen and watch me just explain why I'm looking at these underlying indications, even if the market was going up higher, because it's good to have that in the back of your head, right? It also keeps you in check so that you don't become too biased to the upside, where you have days like today, right, where most likely a lot of FOMO buyers, based on today's gap up, were trying to long and continue to long on this drop down. And so this has provided a lot more liquidity for short sellers. And obviously we got this huge dump today, and we closed within this range of 510 to around 517. This is another range that I've highlighted back in early to mid-March. So, it's going to be pretty interesting to see how we react tomorrow morning to NFP and UR data. But again, tomorrow will most likely be a small gap up. If I take out the catalysts of NFP and UR data, I would say from a technical perspective, we should be getting a small gap up, and then we see the rest of the day turning red, right? So from a green to red day, and that could also provide you guys with a potential opportunity to short if you guys aren't in any short positions. For me personally, I am in SMH short. I've been holding this, and I've been really just holding it out. Even if we had a nice gap up today, I was like, you know what? I can't hold this short, and it worked out in the end. Right, I'm up 40%. So this one definitely helped out with a bunch of my long positions that I had to exit today, and it really just softened my landing here of seeing this potential market pullback. And we got that pullback today, and so the SMH has really helped me out. But tomorrow, I am expecting to grab some SPY and NASDAQ puts. Okay, I really want to grab some index puts here, right, on the indices. So if you guys want to know what that is, make sure you guys join the CFO Discord, and you guys can only join the CFO Discord if you guys become a CFO Swing and Watch newsletter reader. And if you guys want to become a reader, you guys have to DM me at ChartsFocus1, all right, on Instagram. So if you guys do that, I have a big surprise waiting for you. All right, these surprises are for you guys to take advantage of. So get them while you can. All right, so as a summary for tonight, guys, we've been looking at these signs, we've been looking at these underlying indications, and it's something that you guys cannot ignore, right? I've told you guys this since February. You guys cannot ignore these signs, so just make sure you guys store it in the back of your head, because when we need to use it, the time will allow us to use it, and that time was today, all right? And obviously, if you guys didn't get any shorts today, I mean, you still have tomorrow and next week, and the next couple of weeks, and into next month as well. So, it is what it is. If you guys didn't get any shorts today, it's fine. There are still plenty of opportunities to go short in the overall markets, or if you want to go short like me, depending on how we move tomorrow, I will be getting some puts on both the S&P 500 and NASDAQ indices. All right, so yeah, I mean, that's it, guys. I hopefully you guys have been listening since February. Oh, 7 likes. Thank you, guys. Thank you very much. Hopefully you guys have been listening to me since February and just watching out for these underlying indications. And again, just a quick summary. I was talking about the fact that energy is going up and overall commodities start to rage, like rare metals. And if you didn't know what rare metals we're talking about, we're looking at, for example, just overall just metals, right? Like copper, steel, right? They've all been surging up higher, right? It doesn't even have to be rare metals, just metals themselves. So, with commodities raging, energy raging, bond yields moving to the upside, making higher highs and higher lows, bond prices crashing back down, and the VIX constantly making big pops, right? Big volume expansions for one day and then crashing back down. Well, today we officially got the VIX expansion as it closed at highs for the first time, right? Ever since we started to get these big pops since February, right? So, all of these indications just completely came together, and the market reacted to all of these underlying signs by selling off. Right. And so, hopefully you guys understand the thought process of what I was looking at and what I was seeing and observing in the markets. And hopefully you guys are able to execute properly for the next couple of weeks, maybe even tomorrow, who knows. But if you guys want to know what I'm going to be doing exactly tomorrow, make sure you guys join the CFO Discord by becoming a CFO Swing and Watch newsletter reader. All right. So, that's the only way you guys will know exactly what I'm going to be doing tomorrow with S&P 500 and NASDAQ. So make sure you guys join us tonight. But overall, I think the Fed's comments as well, right? Especially that one Fed member being very, very hawkish for some odd reason, saying that we probably won't get any rate cuts this year, which is kind of crazy. But again, the market moves on expectations on what the Federal Reserve will do in the near-term future. So that is definitely going to spook the markets, and it has spooked the markets today, and I truly believe that it's going to continue to spook the markets for the rest of quarter 2. And obviously into the next FOMC meeting, and basically what Jerome Powell will say, depending on what the non-farm payroll data is, and the unemployment rate is, and the subsequent inflationary CPI reports as well. All right. So overall, I think that's a pretty good summary of what I've been talking about since February. I know I've kind of been screaming about all of these indications in a small room without anyone really listening, especially on FinTwit, right? I've seen a lot of people on Twitter saying, oh, today is just a small down day, all right? This is nothing, all right? We're going to go right back up. I don't think so. I don't think so. We've been seeing this top developing for the past 2 months, and I don't think today's move is going to be completely erased, on one day tomorrow. All right, I'm already seeing tweets on Twitter, on FinTwit, that we're going to be seeing a complete erasure of today's losses, which is kind of unbelievable. I mean, yes, there are formal buyers. There's a lot of 0 DTE call volume like we saw yesterday, but I really don't think it's going to be this or that easy to completely erase today's losses, right? This big move to the downside that officially broke the current uptrend that we've been looking at since October of last year's lows. So, that's that, guys. That's my little tangent for you guys as to what I was looking at on Twitter after the market closed. I mean, it's kind of outrageous that these people really haven't been looking at these signs that I've been pointing out since February, and what you guys have been listening since February as well. So, hey, it is what it is. I'm sure the short sellers will be really just happy. There's a lot of formal buyers who will be providing a lot of liquidity for them to get into short positions. So, I'm not saying I'm a full bear right now, but I am prepared to completely shift my momentum and sentiment perspectives in the short to mid term. Okay, so that should give you guys another hint as to when this potential bottom could occur in quarter 2. Right. So for any of the members who are watching right now, if you guys forgot, I'll let you guys know again. Okay. So, overall, be careful. Right? It's slowly becoming a risk-off environment. We've been saying this. If you guys decide to just stay cash. If that's the best thing that you guys can do for your own account. If you want to go short like me, I'm going to go short. And if you guys want to know what shorts I'm going to be getting into potentially tomorrow based on the market price action, make sure you guys join the Discord. All right. My man is a full bear. No, not yet. I have to wait until basically how the market reacts tomorrow to the NFP and UR data, and also how the weekly candlestick closes. But so far, it doesn't look too good. Right, it does not look too good. All right. So, yeah, that's not a pretty candlestick. And we'll be getting a huge jump in selling volume as well if we close out red again tomorrow. So, It should be interesting, guys. It should be interesting to see how many FOMO bulls are about to get kicked out. And there's going to be a lot, I repeat, a lot of FOMO bulls that will get kicked out. And that's going to further fuel a further sell-off, right? And this textbook pullback that we've been waiting for since February. All right? So that is it for tonight, guys. For everyone who's just joining in now, make sure you guys watch from the beginning to the end. I go over so many important points, and I summarize what I've been saying since February. So make sure you guys understand why I've been looking at these things and how it's helping me prepare for what could be potentially coming for us for quarter two, right? So I gave you guys the reasons why I've been looking at these underlying indications for the past 2 months. So understand why I've been giving you guys these indications for the past 2 months. Okay? So again, for the people who are just joining in, make sure you guys like the live stream down below. It really helps with the YouTube algorithm. But overall, again, if you guys are late to the party here, just watch the recording. It will always be uploaded after the live stream is over. All right. Well, that is it for this week. I will see you guys next week on Tuesday at the same time, 8 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time. And I'm thinking I probably won't do a grace period like I did today. Instead, I'll start exactly at 8 p.m. And I will start doing grace periods on Thursday's live streams because I've noticed a pattern that people like to join a little bit later on Thursday live streams. I don't know if it's because it's nearing the end of the week, but hey, if it grabs your guys' attention, I will do it. All right, and if it really works with your guys' schedules as well, I will do it. So that's kind of gonna be the schedule from this point forward. I will start the live streams on 8 p.m. on Tuesdays, and I will start on Thursday's live streams with a small grace period of 10 to 15 minutes from 8 o'clock. So yeah, just remember that, guys, and I will see you guys next week. Good luck tomorrow. Try to remember what I've told you guys tonight. And if you guys want to join the CFO Discord, the private CFO Discord, make sure you guys DM me on Instagram at ChartsFocus1 because you guys have to become a CFO Swing and Watch newsletter reader first. And if you guys do that, you guys will have a very good surprise waiting for you, and you guys should be taking advantage of that. Little wink. I know you guys can't see that, but I give you guys a little wink. All right. Okay, with that, have a great rest of your night, and I'll see you guys next week. And thank you so much for watching. Good night, guys.